Hello, everyone, and welcome to the Small Cap Insights podcast powered by Darrow Associates, which is a leading full service investor relations firm that's primarily focused on micro and small cap entities. My name is Alex O'Toole, and today I'm joined by David Maley, Chief Investment Officer of 1102 Partners. David, thank you for joining me.
Hi, Alex. Thanks very much for having me, and glad to be here.
Absolutely, my pleasure. So, for starters, tell me about a little bit about 1102 Partners and what sets you guys apart.
Sure. 1102 Partners we started 5 years ago. My wife, Judy, and I started it originally to be our extended family's investment office. And I can talk a little bit about my background, but I've done a number of different things in the investment world for over 40 years now. And as we decided to do that, we had a number of investors and people we knew, some who had invested with me in the microcap world, some who wanted to come along as have us be their wealth advisors. So we decided to become a registered investment advisor then. So when we launched in July of 2021, we took on new clients in addition to handling family money. As a wealth manager, we think we separate ourselves by appealing to a niche that I guess you would call very high net worth, probably 5 to 30, 35 million in investable assets. So not big enough to get the full attention from the very big shops. And we treat them like they're part of our family office. So they have my cell phone, they call and text me anytime they want. Again, I have over 40 years of experience. When we've talked about setting up a family office, one of the terms that I heard, which I really liked, was that the chief investment officer should be an expert generalist. And I thought, given the different things I'd done and the experience that hopefully applied to me, and that's what we try to be for our clients. On the microcap side, which I've been doing for between 25 and 30 years, at times before this, I spent 12 years at Ariel Investments in Chicago running the microcap strategy and what we called small cap deep value, full-time stock picking, portfolio managing. And we have clients who hire us just to do that. It's all individual and family and other family office money. And so there's kind of two sides to our business. One is the wealth management, full service financial planning, and the other is the dedicated microcap, special situations, deep value investing that we do.
Great. So, I mean, the fact that you guys started with that family focus initially probably gives all of your clients a really personalized approach because you kind of, I'm sure, treat them like your family since that's kind of how it is that it started.
Exactly. That's what we really try to do. And the nice thing as you get to this, point in a career and you start something like this, you can actually decide who you want to work with just as much as they decide if they want to work with you. So we find most of our business comes through referrals. Sometimes it's from an outreach that someone comes in, but we sort of feel each other out as we go. And we're unique in the way we do things. It's just Judy and me. But we outsource all of the different things that we need to get access to those type of things for our clients. And again, they have full access to both of us. Judy handles a lot of the philanthropy. She has a background there. So, we have clients who have come to us and wanted to start a family foundation. And how do you go about that? How do you manage? But also, what kind of mission would you have? We spend a lot of time talking to our clients' adult children and educating them about, the money that they may eventually be inheriting, but also even things as, mundane as, saving for their own kids' education, buying a house. Should I be paying down credit card debt? Answer is almost always yes, but those type of things that will, for our clients, children will do that. We don't charge an extra fee for having those kind of conversations. So that's really the approach we take.
That's great. And that really, I'm sure, sets you guys apart even further that you're kind of taking, not only is it your own personal family approach, but then you're extending it to your clients' families and just really making sure that everybody in the situation is set up for success on different levels. And it sounds like between you and your wife, you guys kind of come at it from obviously both a similar but with different backgrounds. So you're kind of
Absolutely.
able to hit it on both sides, and it's really like a soup to nuts as far as what services you guys are able to provide, both professionally and also kind of that personal touch to it as well.
Yeah, you hit it exactly right. I have used cell phones because you said it. But that's really what we do. We have such different backgrounds, the two of us, but I think that really helps us when we talk to families and and dealing with our own family and our own investments and things like that. So it's been a really good mix. So
Yeah. And I mean, investing, I think for people on an individual level can be something that can be kind of overwhelming. So kind of breaking it down in that way, I'm sure makes it
mhm,
feel a lot more approachable and less scary to do
absolutely.
because you're also kind of giving people, somewhat of that. You're helping drive the ship, but you're kind of giving people that autonomy in, what it is that what their, goals really are and what's
Right.
important to them and kind of helping that drive the individual ship. Like it sounds
Right.
like the strategies are kind of personalized to really the individuals.
Very much so. Every client, when we take on a new client, we write an investment policy statement with them that says, what we're going to do and why we're doing it. It always starts with what are their objectives? Are they getting ready to retire? Have they just retired? Are they partially retired, which is kind of what we tend to find with a lot of people, who get to quote unquote retirement age. How does that fit? We do a lot of cash flow projections for them, all of those kind of things. And so the ultimate portfolio that we come up with depends on those. So every client has a very customized portfolio.
So how do you go about really? I mean, that's kind of some of the behind the scenes, but how do you go about creating those custom individualized strategies? Like bringing in your prior experience and kind of what you've gotten since you've started this. How do you go about creating those
Sure, that's a
strategies?
great question. So, my original job in the business was after I graduated from University of Chicago Business School, now Booth School, which is actually where Judy and I met. I went to work for Goldman Sachs, and I was in the institutional equity sales as an equity derivatives specialist back when those markets were really just starting. And along the way, I realized that I really wanted to do what my clients did. I wanted to manage money, and what interested me more than the financial engineering side was stocks and making investments. And so I left there on a very friendly basis. I looked for a while I was still there and ended up getting hired by one of our clients, which was Harris Trust in Chicago, part of Bank of Montreal. They don't even use the Harris brand anymore. They just use BMO now. But I was in the ultra high net worth group where I basically worked with two clients and I managed a customized, I guess what you would call a quality dividend growth portfolio for one of those clients. It was one of the bank's two or three biggest clients that we did something completely different from everyone. And that approach to the core equity is what we use for the core equity approach in our almost all of our client accounts now. I've tweaked it since then, but after I left there, after about 15 years, and started really focusing on microcaps for a while, I still had personal money managed that way. And then when we launched 1102. So for most of our clients, we call it the quality dividend growth portfolio of individual stocks. That's our core equity portfolio. We don't charge our clients more for that. All of our clients have separately managed accounts. Their fees, or we're fee only investment advisors, and so we don't charge them more for that. But that's the core equity. The nice thing about having a portfolio, it's typically 60 or 65 stocks of individual stocks, is we can also use that to harvest tax losses throughout the course of the year. We might switch a Merck for a Bristol Myers, and still have the same exposure to pharmaceuticals or things like that. Then we build around that in the most cost efficient way we can to add the other exposures we want. So how much fixed income do we want to have, whether it's treasuries, municipals, corporates, alternative fixed income, which could be things like, funds that are market neutral, that are designed to pay income, other types of investments that get income. And then on the equity and risk side, that portfolio, that quality dividend growth portfolio, is both domestic and foreign. It's really a global portfolio. And then beyond that, add some emerging markets, maybe small and mid cap. And we'll tend to use very low cost index funds for those so that we're not adding fees. We believe a lot in simplicity, expense minimization, tax efficiency. And so that really fits what we do. We're really only willing to pay an outside advisor, whether it's a fund or someone else, meaningful fees if we're getting something that we can't find elsewhere.
And we mentioned before how, or I mentioned before how investing and finance for individuals can feel a little bit overwhelming. And you
Mhm.
also mentioned that, your clients kind of get this family treatment and they get full access to both yourself and to your wife, Judy. how do you bring your clients into that, into their individual portfolio so that they really understand their portfolio and the strategy that goes behind it?
Yeah, that's a really good question. Um, we a lot depends on where the client comes from in terms of their knowledge. Most of our clients are people who have done well. There's not a lot of huge inherited wealth. Some of our families have some amount they may have inherited, but most of them have made money either through a business or just having really good careers and sort of built a pool. And a lot of times they've done their own investing along the way, and they've come to the point where they realize it's gotten bigger, it's gotten more complicated. I don't want to do this anymore. I now recognize the value of having an advisor. So those type of clients are really easy to bring along with what you're doing. And a lot of the things that I mentioned that we do, like, oh, that's a good idea. That makes so much sense to me. I've never thought of that. And that's those they appreciate us for those reasons. But at the other extreme, we have a client that came to us, referred from someone I had worked with in the past, not a current client. And so my wife and I built this business. It was sort of an industrial business, let's say. They were like early 60s, and they were selling it for about $10 million, I think was the number. And they didn't even know what to do in terms of when they got the money. So I spent a lot of time with them, basically helping them get an account set up so that when the money was wired to them on that day, they could rewire it into their brokerage account. So I could buy treasuries for them so that that money was safe because they did understand you don't want more than 250,000 in any one bank. And they had one bank that they dealt with both personally. I mean, their knowledge of investments was so small. So bringing them along to getting to a financial planning and building a portfolio approach is something that's an ongoing thing. And we're not forcing it upon them and saying, you've had 100% of your net worth in this business. Now you have this very liquid portfolio that's generating income, but you're not participating. Here's kind of where we think you need to get to, but we want to teach you as you go along the way. And so it's, a very different approach. Again, we always say, we'll do what our client needs. We customize for what they need.
Yeah, and that financial literacy component is so important on this individual level, and it's super important to just understand where your money's going, how it's working for you. And so I
Mhm.
think that's again something that it seems like really sets you guys apart and I think makes this whole world that everybody's involved in some sector, whether they realize it or not.
Absolutely.
Everybody's got money somewhere. So
Yes.
it's important to understand, how that money can best serve you and help, grow both for the now and for the future. Um,
Yeah.
so beyond that, do you have any examples of stocks that you own, either for yourself or for clients that illustrate this kind of approach that you take in investing?
So, yeah, I can talk about a stock, but I should kind of switch gears in a little bit because when we for our wealth management clients, when I think about that portfolio where we're picking individual stocks, you know, I I'm picking stocks that I like their fundamentals, but I'm also thinking how it fits into this portfolio. Like we run a screen of are they continuing to increase their dividends? Like that's the goal of that strategy is to own companies that grow their earnings and their dividends faster than average. And so it's, they're not stocks that I can out research the world. It's more using what's out there and building a portfolio. Now, the other side of our business, that we mentioned is the microcap world. And there I used a completely different approach because and this is what I did at Ariel for 12 years and at a firm I founded called Maple Hill Capital Management before that. So I launched a strategy in 2002 as a limited partnership. Some of my original clients from them followed me to Ariel in 2009 when I took that strategy there and then have followed me to 1102. So still have some original investors in that strategy. This is the third home. And there we use what I'll call a deep value special situations approach, a real Graham and Dodd type approach, trying to find situations where the market's not recognizing the value. And, one of the things about microcap stocks is that they're very hard to predict their earnings and their earnings growth. And so I've learned over time that rather than try to be the best predictor, try to be the best at pricing what the market is showing you and looking for situations that the market's not getting that value. So, good example of that is a company that we own. We own it for clients who are in our microcap portfolio. I own it personally. I'm not recommending it to anybody who's listening or watching, but it's illustrative of how we approach the world. So it has a market cap. It's called Pure Cycle, and the symbol's PCYO. It has a market cap of about 280 million. It's in the Denver area, and it's a water utility that's been around for a while. They have a service area that's east of Denver. And if you know very much about Denver, it's one, it's water scarce, two, it's growing, and three, it can only grow to the east because the Rocky Mountains are to the west. And so as it creeps east, it's getting into their service area. They own about 30,000 acre feet of water. And an acre foot of water is the amount of water it would take to cover an acre with 1 foot of water, which probably doesn't make a whole lot of sense until what you learn is that that can serve 60,000 single family equivalents on an annual basis. So they have enough water to do that. Now they have one of the things we really care about is good corporate governance, inside ownership, savvy market, savvy leadership. They have a very good board and CEO. And in 2010, right at the end of the financial crisis, they bought a plot of land, 930 acres, 15 miles east of Denver, right on Interstate 70, which is the east-west interstate that goes into Denver and out on both sides, and about 15 miles south of Denver International Airport. Again, in the path that Denver is growing to. They bought this for $7 million from a distressed seller at the end of the financial crisis. They're turning that into a master plan community called Sky Ranch, and they've probably sold about a third of the lots now as it goes through different phases to national home builders. And here's the great thing, and this is the synergy that we don't believe the market still understands this. You have this great asset value, you're literally just in the water. They also have this land that they bought. I think almost anyone would agree very cheaply, given what they can sell lots for now and the timing and the way they bought it. Every time they sell a lot to a home builder and they build a house, they get a hookup fee for water and wastewater and sewage of about $40,000. Now, again, remember, they have enough water to do 60,000. They don't have the infrastructure built yet. There aren't that many homes in this area. Sky Ranch will have about 5,000 single family equivalents when it's done, about two-thirds houses and the rest commercial. Then they get an annuity of $1,500 a year, which has about a 3% increase over year. That's really in perpetuity of very high margin water. And they're selling these lots at big profits. And so you can kind of get a sense of the asset value that's there that the market's not recognized. If you look at it on price to earnings, it probably trades at 22, 24 times, somewhere in there, which is not horrifically expensive by what you see in the marketplace, but it's not growing its earnings fast because that's not the story. On a price to book basis, it's about 2 times book. But if you think about what this water that they have been accumulating for decades, what they bought it for and what it's potentially worth, what the land they bought is likely worth, we believe it's, materially undervalued. And so that's, I think that's a good description of a special situation kind of stock. That's really interesting. There's a lot of other interesting parts about it. They sell water to oil and gas companies, which again is super high margin as they do drilling. And yeah, I think that's a real good example of the kind of stock we look for in our microcap portfolios.
So you're able to kind of use your research and those kind of hard stats to be able to see the writing on the wall in
Yeah, exactly.
situations like that.
Yeah. And that's, in the microcap world, I do very hands-on research. Most of our stocks are not followed by Wall Street very well. There's a handful that are, and there are a handful of good analysts. This whole area of water and land has a lot of appeal to me. And, and there's one particular analyst that's very helpful there. But, we do our own work. I mean, the Mark Harding, the CEO of Pure Cycle, I'm not sure how many times I've met with him personally, plus, Zooms and things like that. I've been at Sky Ranch a couple times. Excuse me. So it's really hands-on research to really try to understand these companies. And, we're very, very long-term investors.
Yeah. And so you obviously have touched on microcap stocks here. So just pulling on that thread a little bit, what extent of your managed portfolios would you say are microcap stocks?
Oh, in terms of, yeah, our assets. I mean, I say I spend about, the best way to describe it is I probably spend about half my time on each. And there are periods where one is busier than the other. Earnings season, which we're kind of in now, is a busy time in the micro caps. I'm getting on their conference calls. I'm having follow-up calls with managements and things like that. But it's probably about half of our time and close to equal in terms of our revenues. Probably more of our assets are wealth management, but microcap commands a higher fee. And so, it works out to about half and half.
So, just keeping an eye on the time here, is there anything that you think I have missed that you would like to still touch on?
I don't think so. Yeah, we've touched on a lot. So I really, you guys very good questions, and I think it was a chance to talk about what we do.
Fabulous. So, one last super quick thing before I let you go, because, again, I want to be conscious of time. You've walked us through kind of where you are now, where you've largely been professionally. So, if you could take us back to the beginning, what was your first ever job that you had as a kid?
My first ever job. I worked at an A&W root beer stand. I was in ninth grade. I washed dishes and poured root beer in the super sweet orange drink they had. And I made 75 cents an hour.
Nice.
Yeah.
So, were you still a root beer guy, or did that take you off it completely?
No, it didn't take me off of it. I still like root beer. That's
There
funny.
you
Yeah.
go. Root beer is one of objectively the best
Yeah.
sodas, if you ask me.
When you're what are you, 14 years old, 15? Like you can never get enough sugar at that age, right? So
100%.
yeah.
100%. I was working at an ice's shop, so
Yeah.
we were all looking for the sugar hit, I think,
Same kind of
in
thing.
those
Yeah.
first jobs.
So
Okay, so David, thank you again for making a time. This was a great conversation, and thank you all for listening. Again, this has been David Maley from 1102 Partners, and this has been Small Cap Insights Podcast, powered by Darrow Associates. I am your host, Alex O'Toole, and I'll see you all again next time.
thanks, Alex. Thanks, Alan.